2024 is off to a rough start. Mass firings and a debt default bombshell will destroy the housing market. Hello friends, welcome back. It's a great day in South Florida, but once again, I'm reined in and the weather is essentially miserable. But there are many things that are happening right now on a macro level that I can't ignore, that I can't duck my head in the sand and pretend isn't happening, that I feel a fiduciary responsibility to share, because if you were to look at the data that is being reported by many of these realtor associations, you might think that the Florida housing market is perfectly fine. There is nothing to be concerned about. There's single or double-digit growth in almost every metro within the state, at least as of December, which is the most current data that's been published. And you'd probably be blown away by the fact that most of these metros have less distressed sales. There are far less foreclosures. There are far less short sales. There appears to be almost no distress in the real estate market. And as a boots on the ground operator of a high performance real estate team, I am constantly studying each and every market within my metro, within my geographic region, but also throughout the state and country. But having been a stockbroker for damn near 20 years, it couldn't escape my notice that for the first time ever, the Dow hit a high and topped 38,000. And the S&P 500 set a record high too. And while most of those gains have been from 7 magnificent performing stocks, it appears that bullish optimism is running rampant everywhere. And I'm certainly not here to poo-poo on anybody's profits. I hope everybody makes a fortune. And I hope the markets continue to skyrocket forever. And that the real estate market will only trade in one direction. And while I was born at night, it wasn't last night. So I know that that's impossible, and it's not going to be the case forever. And I read your comments. Some of you have asked me to do an analysis of some of my predictions, and I've done that before. But I'm not going to make you look for the video or try to find it. I'm just going to give you a brief overview. Because back in September of 2022, when the Fed started their tightening policy, I made a video called The Liquidity Crisis Destroying the Housing Market. And one of my loyal fans asked me to analyze what some of my predictions have been and how accurate I've been. Because obviously anybody who was calling for the real estate market to crash and half-price homes to become available and for the market to become eviscerated has been 100% wrong. And fun fact, nobody can accurately predict when prices will fall. Home value predictions are like a-holes. Everyone has one and they all stink. But the reality is there's simply not a single person on planet Earth that can accurately predict when and how far prices will go up or down, period. But the macro things that were very predictable, I got 100% right, because there have been mass bank failures. There have been mass bank bailouts. There have been mass layoffs. But the layoffs are just getting started, and we're going to do a deep dive into that here in a second, because they're trying to relabel what a layoff is, or they're trying to sugarcoat it to seem like it's something better than what it actually is. But the ramifications of it are stark, and they're happening right now. And unfortunately, the housing market, the real estate market, is going to be the last market that is impacted by these massive changes that are happening right now. And while it's fantastic that the Dow and the S&P just set record highs, you can bet your sweet bippy there's going to be some massive profit taking that happens very near term. But more importantly than that, when the bad news happens, the financial markets price it in instantly. There is no memo, there is no warning. There will simply just be a halt. The market will stop trading. There will be no liquidity. There will be no bids. There will be no market. And even the highest flying stocks that are out there, if their balance sheets are loaded with debt and toxic distress, they will get murdered by the market. Because financial markets price bad news in real time. And the real estate market and the housing market is lagging. It simply doesn't work that way. It takes a lot longer for the bad news to travel through the system, to travel through the cycle. And yes, I know there are a lot of people who are experiencing financial distress and financial pain right now because of all of the affordability issues with inflation that are out there. Almost nobody pays attention to any of that until they are in financial pain. And despite the bull market and despite the brightening economic data showing slowing inflation, low unemployment, and a seemingly non-existent recession, I see cracks in the system right now that terrify me. So far in January, Citigroup announced it's cutting 10% of its workforce. And Google cut hundreds of jobs across its engineering and hardware teams. Amazon is firing people left and right. Even the NFL has offered to voluntarily buy out at least 200 of their employees. But I predicted layoffs, and I've been talking about layoffs for a long time. And I've been talking about bank failures for a long time. And had the Fed not bailed out the banking system in 2023 with our tax dollars, regional banks would have been out of business. They would have defaulted, which would have created a massive run on the banking system. And right now, I see that there's a run on open houses in my market. I haven't seen this many open houses in a very long time. This past weekend, I drove past several different neighborhoods that were all hosting multiple open houses. And one of them really got my attention because it's in the community that I live in. And I give the agent a lot of credit, and I'm actually friends with him. We've done deals in the past, but this guy is on the grind. He is doing everything right. He is advertising this open house like no other, hosting Friday, Saturday, and Sunday open houses for something like 6 hours a day. And I admire his work ethic. But fun fact, open houses very rarely benefit the homeowner. They are only for the benefit of the real estate agent, because the agent can use the home as a storefront and generate new opportunities to meet new buyers. Because, at least in my market, it is extremely rare that anybody buys a home from an open house. And I'm certain that this agent got tremendous brownie points for doing these open houses. I also know that the odds of the home selling are 0% because the home in question is radically overpriced and it's radically dated. And yes, it is factually true, there's not a ton of inventory in my neighborhood of homes for sale, and there are none that are priced the right way. You could host an open house 24/7 for the next 6 months, but if it's overpriced and it's dated, it's never gonna sell. And when I drove by to check out the open house because I was curious, there was nobody there. Because any buyer who's got the ability to buy a home at that price point isn't gonna buy an old dated home. They're gonna buy a brand new construction home that's being built right up the street. And that new construction neighborhood, I get emails from the builder almost every day sharing with me the great opportunity for my clients to take advantage of an incentivized deal and for me to take advantage of an incentivized commission. And when builders are offering more commissions and bonuses to move their product, I know that the supply side and the demand side has changed materially. And yet there are mass purges happening in the workforce. Spotify cut its workforce by 17%. And Discord did the exact same thing, reduced its headcount by 17%. And Hewlett Packard is getting rid of 6,000 employees. And Google has warned that they're gonna lay off a whole bunch of people too. But if you work for Nokia, you already know that because they eliminated 18,000 people across 13 different countries because they had to. They had no choice. But I know that the real estate market isn't going to send us a text message and give us advance notice or send us an email and say, hey, the market's about to crash. But I don't need to read a balance sheet to know that changes are happening and that businesses are suffering. BurgerFi, which is one of my favorite burger restaurants down here in Florida, just permanently closed its second ever location, which happens to be in the most geographically desirable spot you could ever want to have a burger stand or a burger restaurant. It's right across the street from the beach on Atlantic Avenue. We are talking about prime time real estate. But BurgerFi couldn't afford their lease, so BurgerFi is closing the burger joint. And while small businesses are certainly taking it on the chin because they don't have the money anymore, because they've run out of cash and they can't refinance their debt, and there is no more VC money, major corporate debt defaults soared 80% in 2023, which is exactly what I predicted in September of 2022 when I made the video called The Liquidity Crisis Destroying the Housing Market. The number of companies that failed to make required payments on their debt totaled 153 for 2023, up from 85 the year prior, which is an increase of 80% according to S&P Global Ratings. Who goes on to say that in 2024, we expect further credit deterioration globally, predominantly at the lower end of the rating scale. Hard times are ahead for corporate America, which, according to the Federal Reserve, is carrying a $13.7 trillion debt load. I wonder what will happen to people who fall off the corporate debt cliff when they get axed from their job. I wonder how many of these folks are going to scramble for the exit door and sell their home when they realize they've got no job, they've got no income, they're drowning in debt, and the one asset they think they've got equity in is their last and only hope. Well, Reventure Consulting seems to think that major price drops are coming. And MH Fin shared how Ray Dalio explains why America is entering a horrific financial crisis. And Sachs Realty sees it too. According to him, the economy is tumbling. The depression starts now. Orlando Miner sees it. Companies make employees quit. Massive layoffs. And Sachs has doubled down. The debt crisis will collapse the U.S. economy. And while he put that video out 2 days ago, mine was in September of 2022. I said the same thing. But please don't think that this is limited to simply just real estate, because the auto market is getting devastated too. And Car Questions Answered YouTube channel thinks the greatest car market crash ever has started. But despite the fact that the December numbers in Florida seem to be good, despite the fact they don't price in any of the things that are actually happening right now, Reventure thinks that accounts are being liquidated. Bank of America's earnings plunged by 50%. And my good friend Michael Bordenero believes Americans sound the alarm. We can't pay the rent. And a massive economic rescue package is on the way. And I pray to God that is not true, because that will be no bueno for anybody. But I do suspect he's right. It's time to sell. We're not waiting anymore. And I think he's right, because anybody who just got fired by any of those corporations that I just talked about, or the many more that are about to default on debt, any people who get the axe are not going to wait anymore. They're going to cash out as quickly as they can. When the pain gets so bad, they can't take it anymore. But the last thing that I want anybody to do is be in pain. And the last thing that I want anybody to do is be panicked or make a bad decision, which is not right for them. And if I can ever help you with anything, please reach out. I'll include a link at the end of this video and attach it up above. If you want to consult with me, please click that link. It will take you to my Calendly page and we can have a brief conversation. But breaking news, according to Gallup, job unhappiness is at a staggering all-time high. And if Gallup really needed to run a poll to figure that out, I hope Gallup is one of the companies that goes under first.